thanks everybody who's joined us today for this topic. We have Gary Brown, CPA, here joining us on Wise Counsel Live, and today we're going to be talking about tax loss carry forwards. And so that's a topic that a loss from investments or an operating loss in a business is not a good thing, but we're going to be talking about that topic and making lemonade from lemons. And even though that's not an exciting thing that we want in an ideal world, we would never have a loss. We're going to be talking about how we can benefit from that in the best possible way. So Gary and his team have been doing taxes and helping people with planning and trying to minimize their taxes and trying to maximize their profitability. If you have a business, they're here in Georgetown. And so they've been doing that for quite a long time and are happy to help if you're looking for somebody to assist with your taxes. But he's joining us today. And again, we're going to be talking about tax loss carry forward. So just to start us off, Gary, just the phrase carry forward or tax loss carry forward, just the concept of what that phrase means. Just for those that are joining us that are not, maybe they don't do their own taxes and that's not a familiar phrase. Just what is a carry forward, and explain that concept to us.
Carry forward, and by definition, is something that can be used in a current or future year. It's something from a prior year that's carried forward, whether it be losses, as we're talking about. And the loss that we're talking here, it could be one of two types. One from sale of capital assets, which could be stocks and bonds, mutual funds, or it could be losses from a business. If you have a investment that you sold or a partnership that you have ownership in, you might have a loss from that's carried forward, and you're able to use it to reduce your taxes somewhere in the future. The second type of loss carry forward is a net operating loss, which means that your expenses for your business exceeded the revenues, and so you weren't able to use it all in the current year. And by exceeding the revenues, what that means is that you also have more deductions than you have total income in that period, which is why it's called a carryover. Right.
Yeah. You mentioned businesses having more expenses than revenue and having that loss. And I imagine that 2020 will be a year where many businesses experience that. And perhaps maybe they haven't in the past just due to COVID, and in particular, whether it's the restaurant or hospitality business or something like that. Somewhat of a timely topic. And we hope if any of you are watching today and have a business that you're running, hope that this is, you've managed to make it through this and are back to a sustainable and profitable situation. But Gary, you also mentioned just investments and how capital loss and that carry forward. Just want to clarify, many of you watching, you have a large part at least of your assets are in IRA accounts. So when you have money in an IRA account, you take it out, it's just taxed as normal income, whether the investments were, had a gain or loss in there. So today we're talking about the loss or gains that would happen on investments that are not in an IRA. So what we would call a non-qualified account, just something that's not qualified for tax benefits like an IRA or a Roth, just what we'd call a plain Jane investment account. And so that's really on the investment side of the discussion today, really what will, it's to that particular type of account. And then this is somewhat a timely discussion as well, just because we're at the end of the year. And from investments, if you do own mutual funds, we don't have a ton of strategies that use mutual funds here at Wise Counsel. But this is a time of year when there is some distributions from mutual funds, and I'm sure a little later in our discussion we'll mention those and how these tax losses can be used to offset some of that. So just when we talk about tax loss carry forward, the first step in utilizing that and benefiting from that, of course, is realizing a taxable loss. And what are some situations where, Gary, you see that happening for some of your tax clients?
Good example of that would be given the fact that the market is down or has been down for a while, keeps moving up and down, you may have an investment that on paper is at a loss situation. You don't get to recognize it until such time as you actually sell it. And what some advisors do, and we advise some of our clients to do, is if you have a lot of losses, this is a good time to offset some gains that you've had and do what they call harvesting those losses so that you can reduce the tax on the gains. And what that means is that you would offset the gains by whatever loss that you generate. And if the loss is greater than $3,000 more than your overall gains, then you'll have a carry forward to a future year for the difference. So if you have a $10,000 loss and $5,000 worth of gains, you would be allowed to take $3,000 this year and $2,000 in the next year.
Right. Right. So just as an example, some of you watching, you may have one, say you have an account with two stocks in it, and you might have a stock that you've been holding on to for years, and maybe it's been going up in value. And maybe let's just say you've owned that for 5 years. Well, as it's growing in value, as long as you don't sell it, there's not a taxable event, right? So it's not realized until there's that transaction of selling that stock. And so hopefully you sell and it's at a gain. And so if you do that in a year and you have that taxable gain, there's taxes on that. And so what you would want to do or could consider doing in that year is potentially selling something that hasn't done well, that's at that loss. And the action of when you time those is really where Gary can help you maximize that loss and basically reset that one that's not that hasn't been doing that well. And so that's really the beginning of the process. Gary, I know this year there's been some changes to how the timing of how you can use a tax loss carry forward. Definitely want to talk about that, but let's first talk about what hasn't changed. If somebody has a major loss, say they sell something and they sold one stock and they got a $10,000 gain this year, and then they sold another stock. It was a pretty big loss. Say it was $30,000, and both of that happened this year. Just in the past few years and even going forward, what are kind of the limitations for using that loss in the single year? What does that look like?
Yeah, for this year, it's basically the same as it has been in the past. That if it is the from stocks or bonds or investments, if you will, that 30,000 loss that you have, you can offset all of the gain and then carry over everything greater than 3,000 additional. So of your 30,000, if you had a 10,000 gain on the one stock, you got a 20,000 by definition loss, which says that you'll have 17,000 carry forward. And one of the things that the IRS does in looking at that, it'll look at whether that is short-term or long-term. And long-term means that you've held the asset for 1 year and 1 day from the date of purchase. Anything that's less than that is short-term. And so you would net your short-term and long-term. And then if there's more short-term, you can use up to the 3,000. So it's still a good thing for each year to reduce. One of the strategies is if you have a lot of income coming in, you might want to use your loss to reduce that for the $3,000. Now, remember, we have several different rates on capital gains under the current law. One is zero if your income is not that high, which means that it's not going to help you tax-wise, but it would reduce your total taxable income, if you will.
Right.
The other is it's 20% capital gain if you're over a certain amount of income. and then 15 to 20%, I'm sorry. Yeah, 15% normally. Most people are in the 15% bracket. If you have a lot of income, then you're in the 20%. But the average person is either 0 or 15%. So that $3,000 equates to reducing your taxes by $450 basically for at 15%.
Right. $450 less that is
right,
out of
that they would pay in taxes. Yes.
Right. Yeah, so that can be a good thing. Ideally, we would ideally we would never have any investment losses, but that situation that I described, you would have that extra 20,000 over that gain, and 3,000 max per year right now, and that's how many years you can carry that forward. I think that there used to be a limit on that, but there
used to be, but there isn't anymore. You get to carry it forward until, unfortunately, there's no more you. And then if there's no more you, we all come to an end somewhere. And when we expire, those losses are lost. And the only way you get to keep them is if they were in a trust. Yeah, and then it would be passed on. Otherwise, whatever loss you have would be gone. And we see a lot of clients that had losses either in the 2001 era or 2008 when the market cratered. If they were in a lot of tech stocks, they generated a lot of losses in 2001. Almost everybody had losses from 2008. Unless they had great advisors like Wise Counsel, which were able to help them offset that by diversification. But those losses, we've seen a lot of people that still are using those losses and will use them until such time as they die. So if you had $200,000 worth of losses, you may not live long enough to use it, but you still have the $3,000 per year. And it's a good thing to offset any gains that you want to use on stocks.
Right. Yeah. So you may carry that in the case of that situation we were talking about earlier, that example, you may have that 20,000, you would spread it over 6, almost 7 years.
That's correct.
If you just did the 3,000. And if for some reason, say in the 3 years down the road, maybe you have another year where the market does really well, you have some capital gains, you could then go back and use that to offset the capital gains again. Is that correct?
That is correct. You reduce your whatever's left at that time frame. You could use it all, and if there's still 3,000 more, then it's carried over.
Right.
So whatever that number is plus 3,000 is the maximum you can use each year.
Right. So before we move on to diving in a little bit deeper about net operating loss, which some of you listening are business owners, and that would be something that you'd want to listen for and see how you can benefit from that. Before we move on to that, this type of year with capital gains distributions, they tend to happen later at the end of the calendar year. What are capital gains distributions? And I'm talking about the ones that we can't really control the timing of. Where do those come from, and what are those?
Usually those come out of mutual funds. And what happens is a mutual fund has to distribute all of its profits through the year to investors. Mm-hmm. And so in January, you typically get whatever they have, or late December, they'll distribute it down to the investors. And we've seen some times in the past, they got the big distribution, but they got no cash. And so it's a lot of times you don't get cash on it. It's a distribution that comes out of the mutual fund, goes into your account. You still may be at a loss overall on the investment, but it's distributing the profits that they had in their business. You also can see it periodically on corporations if they have certain business transactions that they may be able to generate some capital gain distributions, but it's not. Usually those are more your regular investment type things of dividends.
Mm-hmm. Mm-hmm. Well, let's shift gears a little bit and talk about net operating loss. And from an accounting standpoint, it's very similar to the more investment derived capital gains and capital losses that we've been talking about. but net operating losses is usually going to be part of a business situation. And I know there's been some changes to the law based on the recent Tax Cuts and Jobs Act. That's only been a couple years. But being that this is something that business owners might be dealing with for 2020 for the calendar year, just quickly explain the overall concept of a net operating loss and how that can be used against income.
Okay, net operating loss is going back to what we said earlier. Whatever your revenue is minus expenses, if the expenses exceed the revenue, you've created a loss. It becomes a net operating loss at such time as that loss exceeds all your other income as well. So let's say you had $100,000 of income from IRAs, W-2s, or whatever else, or interest and dividends, and you have $150,000 loss on your business. You now have a $50,000 net operating loss. And there's two rules that were out there when the TCJA, which was the tax law that started in 2018, came about, that Mr. Trump and his administration put through. There were some restrictions on what you could do with those losses. And they used to have a carryover in the past. They removed that and said that you had a indefinite carry forward, but you could only use up to 80% of your income for allowable deduction. That changed with COVID. So in the last few months, when we had the CARES Act that came out that gave everyone that was eligible the $1,200 per person stimulus payment, if you will, it also allowed businesses to go backwards under the law, which is similar to what it was prior to 2018. You can go back and claim those losses against income for 5 years. And then whatever's not used goes forward indefinitely. Prior to this new act, you only had 20 years you could use it. But now it's indefinite going forward, and the 80% rule went away. Now these you have under the previous law, there's pre-2018 losses and post-2018 or after 2018. This one still uses the same rule, but basically says any loss that was generated after December 31st of 17 and before December 31st of, or before January 1, of 2021, you can use those, go backwards 5 years or carry forward indefinitely without the 80% restriction. And so you basically can use all of them. It's going back similar to what the old law was prior to the 2018 Tax Act. But it's a good thing because we've seen a couple clients that hit because of COVID and other things that happened towards the end of 19. They started generating some losses and they've pushed them backwards to get back some money from the prior years.
Right. And so there's a few changes you mentioned, but the fact that we can carry those back to do, if someone wanted to do that, what would be the process to do that, to offset some income and taxes that you had paid in the past? Would that require amending your return?
It would. You can either amend, or there's a Form 1045 that they have, which is a one-time form that looks at the 5 years and recalculates your income with that loss as though it occurred 5 years ago. So, what would happen there? In reality, behind the scenes, you will do an amended return. You just may not submit it to the IRS, and because you have to calculate what the tax would be given that loss. We just did one, for an example, that was in 2019 that under the old law was going to go forward. The client decided, well, since we have the opportunity and they just changed the rules, let's use that and get money back. So we went back the 5 years and used almost all of it up from 2017, and 2018 got some more of it, or prior to 2017. So it was all used previously, and they'll get back a refund plus interest for those prior years.
Right. And so then they can use those funds to help the situation or any predicament they might, any trouble they might be in the current
That is
environment,
correct.
business
That is
environment.
correct. Mm-hmm.
Gotcha. Yeah, that's a huge benefit that is available to business owners. And so if you're someone that you've had a handful of successful years with your business, and maybe it's looking like there's going to be a loss this year, then definitely something to look into is using those losses and possibly getting a refund there if you think that would be helpful. So there's a lot of dates that have really come into play here, and you mentioned some of them. Really gets into the fact that most normal people and even business owners are busy running their business, trying to make the most of the current situation, dealing with employees in a lot of cases. It's very hard for business owners to be aware of some of these benefits that are available, but much even and rarer to have someone that's going to understand all of the dates and timing requirements. So we're really giving an example here why it's so important to have a competent and experienced tax professional really help out with some of these things, especially in the business case. And so definitely recommend, for our clients of you that are watching, if you're feeling like, it's time now to maybe seek some professional help on that, then do let us know or contact Gary and his team. Before we finish up today, Gary, that was really net operating loss and tax loss carry forward. That was really all we wanted to dive into. Any last thoughts or comments or, for our guest today?
Well, this is an interesting year because of COVID and the way the economy has gone this year, with the shutdown of businesses, not being able to function, et cetera. So 2020 may be, depending on what the results are from today's election, may be your last opportunity to capitalize upon the current low tax rates. So 2020 is a great time to think of planning. And depending on what we see from the election at the end of today, when it's finally resolved, there may be some tax increases coming down the road. And so as a consequence, this is a great time to think of planning. If you have the losses, it's a great time to utilize them. And it's a good time to think about other strategies to capitalize on the low tax rates that are here today that may be gone in 2021.
Right. Well, thank you, Gary, for joining us today and diving into this topic with us. For you guys that are joining regularly, next Tuesday, Bob is going to be talking about charitable remainder trust. So we'll have a guest on next week as well. Would love for you guys to join, but that's all we had for today. Hope you guys have a great week, and let us know if there's anything we can help with. Take care, everyone.
Thanks. Bye.
Have a good one, Gary.
Thank you.